So good afternoon, ladies and gentlemen. On behalf of India Fintech Forum, I, Rini Kumar, welcome you all for the online session on driving growth by bridging the gap between compliance and customer experience. This session is supported by Refinitiv. Here are a few points to note before we start with the interesting and engaging session for today. You can ask your questions in the Ask a Question panel, which you see on your screen. The moderator will take your questions and he will ask it for, from our speakers. The webinar will be recorded and it will be published on India Fintech Forum's YouTube channel. And there's a very short survey link on your screen. You can see it, there. You'll see the button. It is completely anonymous. There is, no email IDs or any names to be filled in. Just few questions to get your thoughts on the state of KYC in India. So please do share those. It is my pleasure to introduce the moderators and speakers for today. So the moderator is Mr. Dhruv Chawla. He is partner at PwC. He will be joined in the discussion by Mr. Michael Meaden, Proposition Sales Director, Customer and Third-Party Risk Solutions of Asia Pacific at Refinitiv. Ms. Sucharita Mukherjee, Co-founder and CEO of Kaleidofin Private Limited. Mr. Sunil Kumar KN, Chief Compliance Officer at Federal Bank. With that, I invite Mr. Dhruv Chawla to take up the conversation forward.
Thank you, Rini. Good afternoon, everyone. As Rini mentioned, we've got a pretty interesting topic. We don't really get to talk a lot about that. Either we talk about rules, regulation, compliance, or we talk about compliance sort of in isolation. But I think this idea of trying to figure out how do you bridge the gap of customer experience and compliance at the same time is a great idea to think about. We always try to do that in our own sort of professional areas wherever we focus on. And like she introduced the panel, I think we've got a pretty diverse panel. So I'm hoping that we'll get a good viewpoint. So to kick off, there are a couple of themes that we want to cover. There are about 2 or 3 areas that we will focus on, and hopefully that covers the interest of all the audience. So the first area that I want to touch on and get the views of panelists is around the expectations, right? So digitization, the current way of innovation, financial inclusion is resulting in a lot of products. It's resulting in a lot of new customers being added to the ecosystem, the financial services ecosystem. Maybe let's start with Mr. Sunil Kumar and see what his views are on the expectations of the customers and the regulators, and where are we in this new age?
Thanks, Dhruv and other panelists. And the question is quite interesting to that extent. With the new way, the digitization happening, what is the expectations of the customers as well as the regulators? So when we look that way, it is actually a transformation. As of course, the digitization process has been accelerated during this COVID scenario because the physical presence in every space of life has been completely evaporated or diluted to that extent. So digitization is the only solution which is happening during this COVID scenario. So it is actually accelerated what is already happening in the industry. So it's all started as far as the banking or the financial service is concerned. Primarily, it started from first the paper. We have moved to the plastic currency, the card era. From there, we moved to internet banking, and finally the digitization has reached now the stage. It's all coming back to a simple instrument, the mobile or the smartphone, what you are having. So that is the broad transformation taken place, and the variety of products which is coming. One is the payment spectra, you have umpty number of products to that extent, and even for the borrowing, lending, you have umpty number of spectra. Earlier, this was the scenario where the banks were actually, the customers are chasing the banks, approaching the bank, and getting certain services, what is available with the bank at the time. Now, the banks are actually formulating schemes, products, and the variants in such a way. And actually, the brands are chasing the customers. So, like you go to any showroom, you can choose and pick what you like in the product available there. Now it is all available. And coupled with the banks, the fintech partners are also joining, and whether it is a neo banking or a digitized payment mechanism, whether it is RTGS or NEFT or IMPS or UPI, whatever is the payment mechanism is there. And when you look at the corporate world also, you can see there are the trade related transformation taking place. And everything from the paper, it is moving, physical presence is not required. This is the context, and what is the expectation of the customer? Definitely, he's looking for speed, ease and convenience in his transaction, and the method also. That is where it's all coming back to a single instrument, which is actually deriving the entire transactional lead to that. Then comes, naturally, any customer's expectation will be safe and secure. Of course, earlier the paper-based mode had got its own risk to that extent. But when we moved to the digital also, people were comparatively new to that experience. So naturally, the question comes up whether it is safe and secure. And lots of the news about the cyber security issues, frauds happening, people are slightly worried to that extent. But beyond all those type of challenges or the negative news, the ease and convenience, as well as the new models, what is coming up, is actually taking place in a very, very rampant speed to that extent. And then whether the customer point of view, when he is choosing from the shelf, basically he is looking at, is it the right product for me? So these are all, and whether the customer rights are protected. So these are all the major expectations coming from the customers. On the other side, looking at the regulator, actually, it will be some way of an alter ego of the same expectation from the customer. Even from the regulatory side also, the speed and convenience they are recognizing. But unlike the previous mode, they would like to have a very, very clear audit trail through the digital mode. So the audit trail of each of the transactions, where it originates, where it sends, how the transformation happening through the institutions as well as the fintech entities, that is what they are looking. Whether your systems and processes can have full data and how it is generated, how it is ended, whether that audit trail is available is what the regulator looking into. Naturally, the next point that regulator will be looking the data sanctity and veracity, because everything is now non-face-to-face customers interactions are happening. Whether the data is accurate and whether it is sanctified, authenticated by the customer or the intermediary institution. That is again one of the expectations of the regulator to be happening. And again, product suitability is very, very important, because this is more important in a context when we are coming up from a financial inclusion perspective. Then the product suitability, whether there is a mis-selling, customer has understood the product and whether they are choosing the right product, whether it is safe and secure. And beyond that, any regulator will look at whether it is a UPI or IMPS, when it is growing like in this scale, whether there is a potential for a systemic risk if this is failing. These are all what the regulatory expectations and looking. So I will stop it here, because we can elicit the views from the other panelists also and take. So these are the broader pictures I would like to present in the beginning. Over to you, Dhruv.
Thank you, sir. Apologies, I just had a problem with my internet. I had to switch off and connect again. So Charitra, how about you? You
you are focused on an interesting segment, and I think your views on sort of creating that ecosystem where a lot more people get involved, but at the same time managing that customer experience, because it's a different segment of the market, so those expectations definitely are a little different, and then balancing and what you're seeing how the institutions are managing the compliance on that side.
Yeah, absolutely. No, thank you so much. Thank you also for inviting me to this discussion. So overall, the way I see it is that even though today we have PPIs, banks, NBFCs that are regulated by the RBI, in reality, payment products, loans, deposits, bank accounts are actually being delivered through a wide variety of digital interfaces. And many of these are not regulated formally. And it is the responsibility of the partner institution, whoever they are partnering with, to make sure that they adhere to the regulatory standards. So, there are a few requirements here that seem sensible for the scale up of this digital journey. I would divide sort of the inclusive customer segment into a very wide segment, about 800 million customers odd, who have feature phones, perhaps early smartphone users, only speak and read regional languages. Therefore, English language apps, etc., don't work. And most finance apps, even today, are either in English or perhaps in Hindi, but very few are, if you look at it. So there is that 800 million, and then there is, maybe another 100 million, which is low income, the Uber drivers, the Swiggy riders, who are quite proficient with the smartphone. And there is an incredible amount of choice available, right? Mr. Sunil Kumar also said that today, the amount of choice available, if you're able to access a smartphone, able to navigate a finance app, is pretty staggering. But one of the things that I think hasn't changed at all is the level of knowledge of the customer. It's not like the customer is any more knowledgeable. So even if you put 20 products in front of the customer, today the customer still doesn't have a good way to choose. And the onus of choice very clearly by RBI has been put on the provider and not on the customer. But this is, I think this really needs to be enforced. And this provision of suitable products, actually conducting a financial health assessment. I know that this may come in the way of a smooth customer experience, and what I might really want to do is buy that television like right now. But you've got to recognize that, what, you're taking a 50,000 rupee liability. And now, let me just take an example. I'm going to I'm a Swiggy rider. I really want that television. I want to see a big screen. And I now see a buy now, pay later. It doesn't even say it's a loan. It doesn't very clearly say the interest rate, nor does it talk about charges, penalties anywhere. I, of course, happily click on buy now, pay later. It sounds beautiful. And now I have a nice 50,000 rupee liability, and I have no idea of what interest rate, what charges, what liabilities, what is it that I have signed up for. I do think that this, this customer protection is an angle that we have to look at seriously. The second dimension that I wanted to bring up was the vast 800 million, which actually needs, I would say, very active assistance. So today we have a network of microfinance institutions and banking correspondents dotting the country, which cover, let's say, anywhere between 100 to 200 million customers, anywhere between that number. And I do think that an evolution of regulation for an assisted interface is also required, because you do have to imagine that if such a large number of people is going to need help to understand a product, to even navigate, the smartphone interface, then regulation has to sort of recognize that. And in some sense, earlier, all of us used to do face-to-face banking, right? I mean, let's say dial back 20 years ago. So it was all face-to-face. But I think in this context, there is still a need to recognize assistance and the crucial role for assistance. And I actually think that once we recognize that, we can still make sure that customer interests are protected by making sure that the layer of assistance, the agents that are reaching out to the customers are doing their job properly. They are being supervised by a regulated institution. But I do think that it needs to be recognized, because if you don't recognize it, then sometimes assistance is not even possible on a digital interface. So, you kind of leave out 800 million people unwittingly, even though I'm sure, it is not, it's obviously not the objective, but I think it needs to be recognized as a separate set.
Okay.
Yeah.
Thanks. Mike, let's bring you in. So there is a question also that I'm looking at, which actually sort of plays into, I think, your area of expertise. So in addition to your views, if you can sort of weave in something around, there's a question where somebody's asking, is compliance as a service now something that is available? So Mike, do you want to maybe address that while you're giving us your views on what you're seeing both from a global and a India specific perspective?
Sure, no problem, Dhruv. And good afternoon, everyone. Thank you for your attention today. I think Mr. Sunil put things very eloquently and very well to explain what's happening. I guess I just want to add on to emphasize some of the points he's made. This is a topic I feel very strongly about. And then, as you said, Mr. Dhruv, I will talk about the compliance perspective and how technology is empowering compliance. So I guess I'll just start with generational expectations. I'm what recently a term got coined called the geriatric millennial. So those are the millennials that are the older side, so between 35 and 40. I'm closer to 40. But even for me, I make part of my decisions about what financial institutions I use by how easy they are to use. And honestly, if I have to ever show up at a branch, I'm not going to do business with that financial institution. And I guess the point I want to make is that very, very strong generational preference that has emerged, and it's not just millennials, it's others too, but it's probably most pronounced in millennials and subsequent generations, is even more intensified. And the story I like to tell is I've got two kids, one is 7 and one is 9. And in their opinion, broadcast television is broken. That seems like a strange thing to say. I don't know about you guys, but when I grew up, there were 4 TV channels. They only showed kids programs during certain times of the day. Maybe on a Saturday, you had to get up early. You had 2 hours of kids program before it was on boring adult stuff again. My kids grew up on YouTube and on Netflix, and they cannot fathom the concept of not being able to choose what they want to watch. Even though the broadcast television you have these days has 200 channels, for them, broadcast television is just, it makes no sense to them. In their imagination, it's broken. The way they like to consume content is through the infinite choice of YouTube or Netflix or another on-demand service. So that's just to emphasize that even though we've already seen these shifts in expectations for financial institutions that has, and a lot of people have been forced to digitize by the fact of the coronavirus, working from home and so on, and that's probably driven more digitization than any other event in human history. But on top of that, the next generations are coming. So I guess the ultimate point I'm making is that these expectations are in part generational, and it's even more acute with the younger generations coming. So for financial institutions to succeed in the future, there's going to be a very strong selection for native digital experiences with mobile first experiences and face-to-face last. And any institution that's not capable of doing that over the next 10 or 15 or 20 years and doing it really well will simply not be competitive. And then on the compliance angle, Mr. Dhruv, it's a really interesting one. These technologies are incredibly empowering, but technology, of course, empowers neutrally. It empowers the bad guys, the good guys, the neutral guys. It empowers everybody. But the good news is the good guys are also empowered. I've just observed globally, across Asia, across emerging markets, even in advanced markets, that perhaps we as the good guys, as the compliance people, haven't taken up the empowerment or used these tools sufficiently, or in some cases we've been very enthusiastic, but we haven't been able to convince our boards to make the necessary investments. Hopefully that is changing now, but the ability to do proportionate due diligence at scale using API first, cloud-based, very intelligently driven, artificial intelligence driven adverse news and adverse media and risk detection at a large scale is better than it's ever been. I'm not saying that those technologies are pain-free, or you won't have to have clever operational people to make sure that you have the right screening program design. But when it comes to due diligence, the ability for financial institutions and others to do mass proportionate due diligence screening is better than ever. And the same with KYC. So the question came through, are they KYCs as service providers? The empowerment absolutely is there for compliance officers. There's been multiple technologies. I mean, we're one service provider that have technologies like this, but there are others. I think the space has been particularly fertile in the last 5 years, where you're able to do a multitude of KYC onboarding checks to, for example, authenticate a particular document, and do it in a much better way than a bank teller ever would have. Because how would a bank teller know a particular passport is legitimate or not? Well, they kind of eyeball it, and they might have a book under their desk that is a reference document for a particular ID. So if someone shows up with a particular driver's license, they might, look in their book, what is it supposed to look like, right? You now have technologies that uses machine vision to read these documents at a much higher fidelity and much more powerfully than a human can ever do, and try to read, is this a fake or not? And you can, with very high fidelity, make decisions like that. There's also the ability to use things like credit bureau data to do verifications on addresses and others. So absolutely, there are multitudes of technologies available now. Everything from cloud-based big data due diligence solutions to really powerful onboarding solutions that doesn't make it pain-free, but it makes it a lot less painful. And the beautiful thing is that the technology is empowering, and empowers the customer. At the same time, it empowers us as compliance people to make sure that we're following the regulations, but even more importantly, we're protecting our institutions from being misused for the purposes of laundering money or any other nefarious purposes. And with that, back to you, Mr. Dhruv.
Dhruv, I think you're muted.
I'm sorry. I think there was a question. Thanks, Mike, for that. Rohan had asked a question specifically around whether compliance as a service, we know software as a service and other things. So Rohan, there are service providers, even big four audit firms like mine, specialized services around services which Refinitiv and others provide. So compliance as a service, as a concept, does exist. I think if you reach out to some of these vendors and companies, you can get more details. Let's switch gears and maybe understand how. So one thing which, from a consumer experience perspective, the theme which is coming out and we're reading a lot about is around consumer protection, right? Because as you're expanding this ecosystem, as we are making it very easy for both the institutions to be able to acquire customers and clients, and the customers to be able to avail the different products through, like Mike said, he doesn't want to walk into a branch. It's all on the digital phone. or on a digital platform. So, Mr. Sunil, want to get your perspective as head of compliance for a bank. You've got your traditional sort of thinking systems, and then you are also embarking on this digital journey. So how are you keeping the interests and the customers sort of security safety at the forefront, and what are some of the challenges, maybe even examples of how you've transitioned some traditional compliance processes, for example, maybe authentication of documents, or whatever examples you think, and how they are transitioning to better serve you as a compliance officer, but also maintaining at the same time the customer's security or protection.
Yeah. The traditional banking, definitely its methodology. I don't think I need to explain it how it is happening. There are 2-3 parts of the customer protection even from a regulatory perspective coming up. I will put it in 3 buckets very clearly. One is definitely the identification of customer. That is what we normally call it as the KYC. And the second part is definitely the customer rights, to that extent, whether he has been given the right product and whether it was useful, whether he is charged appropriately, all those connected topics I am connecting with that customer rights. And the third part is coming up with the data protection related. So that is very, very critical. But traditionally, we all agree that in India, the data protection, to that extent, we have not, unlike the Western world, or not considered these data, because anybody you ask, what is your mobile number or email address, really people themselves is ready to share it. Nobody thinks it is a personal data, and it is part of a very private thing. Any shop you go, anywhere outside the world, India, you can see that any shop says, if you want your mobile number or the email address or in that survey form or something to be filled up, do you want communication, how it can be used, everything will be written. Here, nothing will be there, just as a matter of right and demanding. And we have experiences. Certain shops in India, if you don't tell the mobile number, they will refuse to process the payment. So that is what the traditional experience going by the data handling. So let us come back to the 3 scenarios I mentioned. As far as the KYC, KYC's one part is getting easily fulfilled by this technological part. That is identification. And this I will correlate to Sucharita's topic of financial inclusion. What's the biggest problem in our financial inclusion? Because these customers didn't have an identity document which would satisfy the traditional banking state. That is where the Aadhaar related experiment and the present stage where it has been reached. Almost we can claim that almost everyone, or at least 85 to 90% of the population is now having Aadhaar. This is the single document of identity, and the KYC first part is completed, because even if you are just getting the number or just shown in the proof of Aadhaar, you can verify independently, validate from the site. Though it is not reached that stage, even look at the passport. You can go at the site and see from a passport seva kendra, you can verify. Even driving license, Vahan registration, it is there. I will correlate what Michael was saying. You need not see the original, validated, somebody put the chapa and say that original seen and verified is not required. Independently, institutions can offline verify. That is a tremendous change, and the first part of the KYC is complete, and technology is served well, very well in this context, identity. But the next stage of KYC, do you know the customer? That is a big challenge. Interestingly, when these digital things are happening, one of the questions coming up from our branches, when your centralized mechanism is opening digital or mobile banking accounts left and right, and tomorrow a money laundering alert comes up, they are checking with the branches, tell me whether this is the right customer. How do I know? I never saw the customer. I don't know what is expected from me. That is where the next point where Michael has said, now the branches or anybody or an individual cannot analyze data analytics. That is the most critical thing, whether it is big data, artificial intelligence, or the data analysis to that extent is concerned. And the way in which how banks are moving is very interesting. Traditionally, banks all started with different systems. One department, my risk department will say, I will go by this system. Another department will say that I will go by this system. Then core banking system separately. And some stages I have seen some certain banks in India, there are 200 to 300 systems capturing data and this thing. And these systems are not talking to each other. Now, the new solutions coming up, whether it is with the new vendors and technology solution providers, you pool all this data into a data lake, whichever system it lies, and do the analytics there, and next day you will get the alert. Or within same time you can get the alert. So that data analytics is the second part of analyzing the customer, understanding the customer through the transaction, not by the face. That is what the critical thing. And authentication is more easy. It can be a thumb impression, whatever is the digital this thing, or the iris watch. It's all very easy. Authentication, identity, analytics completed that area. So it is actually protecting the customer in a better way. Second scenario and third scenario of customer interest protection as well as data protection is little more tricky. The point is, Sucharita referred about earlier about the education. But a country like India, with this more than 1 billion population and almost 30-35% have got an education background of a lesser level, it's very, very difficult educating the customer. So at least in the temporary stage, that is where the regulator, it is so onerous on a financial institution, they have put the responsibility on the bank very clearly, identify the customers, understand their needs, and ensure it. And even if you are engaging any agency, either a business correspondent or outsourcing, it is fully your responsibility to ensure that. And they are not looking at even whether a VC or a fintech or any other entity is coming up, whether they would be able to have this customer protection. But banks need to ensure. It is very onerous, but there is, so the result would be banks will be devising such a simple product where it is very easy to that. I am not saying we are in an ideal world right now, but definitely that is where it is looking, because regulator will go always one step behind. They can't go one step ahead. The reason is then innovations will be chalked. So when the digital lending started, initial stage RBI kept quiet and watched. Then they assessed the market, what is happening. They came with a digital lending related regulation. There, all these terms, conditions. The problem is that everything can be notified to the customer to that extent and taken a separate confirmation from him. The problem is each time then your speed is affected, your ease is affected, convenience is affected. This was a constant discussion and disconnect I have with any fintech entity, because I used to tell fintech, you can say that error and trial method, oops, I made a mistake, but can a bank of 75 years legacy, can I say I made a mistake? So that is where the challenge. So whenever I say for this particular condition, you have to highlight only if it is accepted, or you have to give a portion for rejection also, then it says my entire transaction, which I am expecting, which is to be completed in 50 seconds, now it is taking 3 minutes. Where is the customer experience? That is a challenge we need to actually deal with. And the last portion, I will cut short to that extent. Data protection. I said that what is where we stand right now, but that is where we are looking like a GDPR, like a regime. It is in the parliament state. So there also regulators are clearly responsible. Depending upon your turnover and profit, you will be penalized. It's a huge penalty what is coming up that. And the personal data, sensitive data, how you have to store. But the biggest challenge is the entire data management is now moving from banks to the fintech. and they are not regulated at all to that extent. Then what we have is only a contractual arrangement. I may pull back, I may put a penalty on you, but it is not that effective. So unless the problem is you can't choke the innovation, but at the same time you need a protection. So that is where the difficult terrain we are walking on the data protection related. But definitely banks will be more and more careful. And how it will all happen is that customer will give the fintech, that is the solution we are all seeing, authorization to fintech to collect and do it. Then it is purely a contract between the customer and the fintech. That is where the regulators are coming back strongly. Don't allow such arrangement. You be whatever may be the arrangement, customer told, you are responsible. So it's a chicken and egg scenario, but that is the way presently it is getting protected.
Got it. Thank you. Before we move on, I think there are a couple of questions which so Mr. Narayanan had asked about, while the systems have changed and we've gone to digital means, still interacting with the bank, whether it's through emails or all, banks don't take cognizance to that correspondence. And I think Mr. Sunil did mention it, that's something the banks also have to change. I think it's maybe more of training and again changing the way they are operating, that instead of getting a phone call or having a face-to-face complaint, through an email also, it can be resolved. The second one, I think, is around decision making. And again, this is interesting, and there is a lot of thought in that comes around it. That how far can you replicate a human mind to make some decisions, especially around when we are looking into fraud. Because the number of incidents or alerts that are getting generated because of the volumes is quite high. So maybe in 30 seconds, Mr. Sunil, if you can address that, in your view, will we get to a stage where a majority of these decisions around determining, this is a fraudulent transaction, pay the customer and you will worry about, how far are we from it being, say, fully machine driven to the extent possible?
Yeah, I don't think it is definitely that human face is there, but that human face of decision making, what we are talking is in a very traditional way. When we got the data, documents, information, that analysis very. Now the analytical part machine can do better, and the problem is you need to set the right rules, right parameters. There is some trial and error. So what is happening is every fortnight or every month, trends will be assessed based on the parameters have changed, the rules have changed. So you are getting the right alert. When you get the right alert, definitely human mind is taking that decision. So it is a combination. It's a better process, I would say, rather than the individual mind approach. It's a better combination. You have a better analysis and better alerts are thrown. The problem every alert are raising is how to weed out the false alert. That is where again the data analytics helps. There are a lot of systems coming up now that they will analyze and weed out the false alerts. The false alerts are minimized. Human judgment can be applied in that minimal case, and it will be more effective.
Thank you, sir. Sucharitra, what is your view? Because you deal, like I mentioned earlier, your customers and the focus is very different than the traditional. So when you are thinking about the products and the services and how to service this, how do you balance that compliance thing, or is that even a thing that is in the equation, right? When you're considering on how to approach the strategy.
Yeah. No, so at Kaleidofin, our customers are completely in the informal segment, generally in tier 3, 4, 5, 6 locations. We're present in about 200 odd districts. And honestly, the preferred digital mode of communication is voice. It's not even text in local language. It is voice. Our own experience is that, let's say, as Mr. Sunil Kumar said, one of the most important duties of a financial institution is to ensure that the products being provided are suitable. What we want to provide is a range of products that are suitable because each interaction, each face-to-face interaction with this customer, it's actually very expensive, both for the customer and for the institution, because there's an opportunity cost of time. Each time, let's say you take an auto and go and spend half a day, the distances are also greater. You lose the day's wages, right? So it's not necessarily ideal. And, therefore, what we feel, for example, is that technology actually enables suitability. So at Kaleidofin, we are able to do a one-point real-time financial health assessment where we pull out the credit bureau, we have an API integration typically with the NBFC partner. We pull out their data. We have a questionnaire which is sort of dynamic, which asks them, let's say, 7 or 8 tailored questions. We put all of this data together to come up with a financial health assessment of this customer. Also, the other thing we do is that we don't actually confuse the customer with 20 different products. When you are doing a financial health assessment, and if you're doing that job properly, it should be quite obvious that there are these 1 or 2 choices that are available to you depending on what your life goal is. So a lot of customers, for example, are trying to send their kids to a professional college so that they live, better lives than the parents. And depending on that life goal, we actually just show the customer 1 to 2 choices, nothing more. So keep the experience very simple. Therefore, taking the onus very much on ourselves. But if I were to imagine a physical process of doing the same, honestly, it would be impossible and too costly. Technology actually really enables this. We also, to the point of identification, do video KYC. For instance, we changed OTP to a combination of phrases, random phrases, because, customers just found it easier. Saying 6 digits was not very intuitive to a customer. Also we had unique things like, sometimes a lot of customers come in groups, and very often when we're doing KYC, you can see 2 people. Sometimes you can see 1 child and a mother, and these are, so we had to make sure that we use the technologies in order to make sure that there is only 1 face. It is the face of the customer. The customer is speaking, is lively, and so on. But I think technology enables a huge amount. Like Mike said, there are good guys and there are bad guys, bad women as well. Don't want to be gender insensitive. And in some sense, we do have to, regulation is looking to weed out those instances of bad behavior. And for example, when we started Kaleidofin, we actually, just before we started Kaleidofin, we actually visited Kenya, which was one of the markets where digital lending completely exploded. And, there was a surfeit of mobile loans that were being given, small, really tiny loans, like, 100 rupees worth, 100 to 1,000 rupees. Something like an astonishing 14 million out of 52 million. 52 million is the total population. I'm not even talking about the adult population. That's probably 40 million or 30 million. 14 million people were blacklisted on the credit bureau. Out of a 52 million population of Kenya. Such, so a lot of bad stuff can also happen. And honestly, it was because a lot of customers were given loans that they weren't aware of. They were sort of these freemium type of products. And this was in a bid to generate a lot of data, but it's at huge cost to the customer, right? And to the system as well. So I do think that we do have to be, there are very positive sides to technology. There are also indeed, you can also, inflict problems at a mass scale with technology, at a scale that was unprecedented. And we do have to be sort of careful about that. I think the use of AI, again, is very exciting, and we do use, supervised ML algorithms. But again, I think the voice of reason is that, we have laws that say that you should not discriminate. It is in our constitution. And we do need to, make sure that there is supervision enough to ensure that there is indeed no gender discrimination, no community-based discrimination, and so on, which I worry about a little bit. So I do think that these finer aspects do need to be looked at, and if there, and which actually needs an incredible amount of sophistication. Not easy for models not to discriminate on the grounds of, attributes that you were born with, for example. So I think lots of potential, and I do think that it's a responsibility of market participants as well to evolve codes of conduct even on their own. I don't think we should leave everything to the regulator. Regulator would have an easier job if we knew that, okay, if we are all acting responsibly, then there would be no big acts coming out in the future. So I do say that I would encourage that.
People forget that I think the regulators don't get enough credit. They only get criticized on making things stringent. But the true role of the regulator is to actually create a fair play ecosystem for everybody to have an equal opportunity, just like you're saying, both from a customer perspective and also from the participants, right?
Yeah.
So okay, let's switch gears. I know we've got about 14-15 minutes left. So Mike, I want to pick your brain, trying to bridge the gap, right? So like me, you're also a consultant, working with clients and helping them both on the business acquisition side from a customer, and we've heard from Sucharitra and Mr. Sunil also. But as somebody, both of us, are sitting outside, and then we're trying to figure out, how do we help them bridge the gap or the balance between technology or deploying technology for customer service and compliance. And do you see that there is a bridge between the two, right? So I'm just reading the topic of the webinar, the compliance and the technology, or the customer experience and the compliance bridge. Any examples you have and thoughts on that would be, I think, good for the audience.
Absolutely. And one of my favorite things to do, well, two of my favorite things to do are work with fintechs, because fintechs think very differently and think API first, think technological solution first, before they think, let's throw humans at a particular problem, which I always enjoy, because that approach tends to be very, very fruitful. But having said that, the other thing I really also enjoy, if you have the right set of customers with the right leadership and the right support at board level, is to work with more traditional financial institutions and transform their compliance operations from something that's more manual, more inefficient, where you have humans doing very menial tasks. And by that I mean things like, if you think 10 or 15 years ago and you wanted a bank account, how would you do that? You would show up at a bank, they would probably take a human would sit there, they would ask you for your ID or passport. The person would then go look at the document, make a photocopy of it, put it in a file, and engage in all sorts of, ask you for proofs of all sorts of documents, right? Very, very manual processes. And you needed quite a lot of humans to do a lot of those tasks. And it turns out, and this is something we've proven to ourselves, and many companies are live with these technologies, that machines can do a lot of those manual tasks much better than a human can. And there are much better ways, for example, to do due diligence than Google. Right? You don't want to be doing due diligence by asking humans to take someone's name and manually put it into Google, and then sit there and take print screens of the results you get for the first 10 pages, or print it out, even worse, and then put it into a file. Or the other thing I've seen some banks do is they buy all the newspapers for the day, right? The boss, the head of compliance, buys all the newspapers in the morning, hands out to all of his staff, and everybody's, for the first hour, I'm sure, having great fun reading the newspaper, looking for any stories about money laundering or anything else about their clients, and then go, oh, okay, this person was mentioned. Let's log on to my core banking system and check whether this client I'm doing business with, right? Now, those types of tasks, humans aren't nearly as good as machines at doing those tasks. But machines are really bad at judgment, at differentiating a near miss from a true hit. And they're really bad at just nous, at the human ability to synthesize multitudes of different data sets and make a judgment about the situation. They tend to be very good at very defined tasks. Just like a robot is really good at building a car, because you can break it down into discrete steps, and a robot is going to do that task much better than a human. But a robot is not going to tell you how to design a good car, or what does a beautiful car look like. That judgment requires human ingenuity, and that's where, from a compliance perspective, and sorry, I know maybe I'm being quite flowery and waxing lyrical here, but the opportunity that I really see in working with financial institutions is to free your staff from doing those manual tasks and get them to do that real intelligence gathering. Let the machines do the mass due diligence, and then focus in on, well, okay, there's this person, this doesn't feel right to me. There's something going on here. And that's when you start seeing an analyst finding, oh my goodness, there's a link to North Korea terrorist financing, or sorry, proliferation financing, or this person here is potentially associated with ISIS. And the computer then picked that up. It takes human intelligence to take a small hint that something's wrong and follow their nose and really investigate. And that's where I think the beauty of these technologies come from. You take away the manual tasks and give the humans what we're good at, which is the really in-depth analysis. So that's where I see the real benefits of this approach being followed, and the same, or manifesting themselves. And the same, I think, applies to the regulators on the other hand. We work with lots of sanctions bodies, we work with lots of regulators, lots of law enforcement agencies, and using technology to fight financial crime and crime generally is a topic I'm very passionate about. And I've seen firsthand that when there is a real strong enforcement and a strong culture of compliance within a particular country's compliance industry, and there's a partnership between the private sector on the one hand and the regulators and law enforcement on the other, that's when you really start to see these big cracks in these organized criminal gangs. You see these big cracks happening with large-scale money laundering operations or terrorist financing operations. So I'm very passionate about the ability of technology to empower us to do true due diligence, do true KYC, put the K back into KYC, instead of just being a documentary exercise. Drew, back to you, sir.
I know we are coming up on time, so there's one question, and I was going to go to Mr. Sunil for any summary comments. But Mr. Sunil, there's a specific question I think Ritesh has asked, is that there is still a lot of discrepancy or lack of uniformity in the information and the documents that are required for KYC. I'm not sure if I agree with that. At least in my view, it's become pretty standard. But as a bank who's servicing, clients across the various spectrums, if you do still have, very disparate ways of or very different types of documents that are required for different products and services, then the question is, how are you deploying technology effectively, right? Because it's not helping, while it's making it efficient, it's not actually streamlining the information that you're collecting. If you can address that, and then any, last comments you have on what you would think from a experience / compliance perspective, any last thoughts you would like to share with the audience? Do we have Mr. Sudhir?
Sorry, I was on mute. Yeah.
Oh,
so
that's okay.
As far as the KYC is concerned for an individual, now it is pretty simple to that extent. Identity document, that identity document should contain address. That is sufficient. So whether it is a passport or whether it's a driving license or Aadhaar, to that extent, it will be completing all these requirements required. And apart from that, very simple two things are required. Just a photograph maybe, and that also digitally can be done in the KYC mode. As far as the other document is that, again, taxation related thing, PAN. But now it is not required because as per the Income Tax Act amendment, if Aadhaar is there, so Aadhaar is a single solution for that to individual KYC. When you move to the corporates or to the quasi organizations, there are certain additional documents like you may require a bylaw, memorandum of association, registration document. The problem with that, the Aadhaar like KYC document, you have a digital verification process. But all other documents are still in the physical form. And that is where it's happening. This is exactly what we are facing in the trade. Trade earlier problem was all the Reserve Bank of India regulations require paper. Now we are all allowed to do that. But is there a transformation happened? And it is not only for banks alone, because customs required, shippers required, insurance required, everyone needs to. So that is what's happening with regard to other documents. That is where there is no inconsistency. There is a clarity in the regulation, but yes, you may require the document, and when you assess the document, you may ask additional information if you follow in an enhanced due diligence category. The solution is not immediate and it's very costly to a certain extent, and also not error-free, is OCR technology. Where you have a physical document, use the OCR, but even the best of the results is coming only 85 to 90%, but predominantly that can be used to a great extent. So that is what my response to the KYC related response. And to the the thought you said that on a compliance front, what is your bigger thought? So the one more point, see, all these things we are talking about the procedure, process, and how it will be ensured, and all those things from the financial institution's perspective. One fundamental principle, and that is also regulators are very clearly articulating, is the principle of conduct and ethics. And when I refer that area, that is what stresses are getting. That is what Sucharita also was mentioning about. All these protections, bankers needs to have this, and particularly, and I would suggest that the Financial Control Authority of UK has done a brilliant job in putting the conduct principles in a very crisp manner of 5 conduct principles. And that principle says high ethical standards, both in professional and personal life, including the personal life they are mentioning. And second thing they are saying, apply the due care and skill when you are doing. So all this paraphernalia is what we are discussing about suitability, everything will come. Third is customer transparency and best interest of the customer. If we follow, and other one is the cooperation with the regulator and market discipline to be followed. Market discipline, particularly with regard to securities market. So the first 3 principles, if you look at, if the financial world as well as the fintech world is keeping these principles in hold, and devise the process and controls, that would be the best result getting for the customers, for the institution, as well as to the system. I will end up here and hand it over back to you.
Thank you, sir. Sucharita, any last comments?
Yes, just one last additional point as I was reflecting on our discussion. So we talked a lot about client suitability. And I think that sometimes suitability is confused with simplicity. And, we come to the conclusion that, 600 million customers, let's just provide them bank accounts. And because they are simple. But if you think about it, actually customers, given their volatile lives, and sometimes, for example, you need to save money, sometimes you need to borrow money, and it keeps changing all the time. You actually need more complex financial solutions. They can be delivered simply, but you do need to combine different financial products in order to actually come up with a sensible solution that works for the customer. So I think if we really have to do our job properly, let's not sort of go back to simplicity and really embrace suitability, and which may mean complexity behind the scenes, not for the customer, but for the provider. Those just last thoughts.
Michael?
I don't have much to add. Thank you very much for everybody's attention. I'm always excited when I get to talk to such smart people on the same panel. I've learned a lot from everyone on the panel, and it's always exciting when I talk to people who are excited about fintech, because I think challenging the status quo and how things are done and improving how the financial world operates is a continuing challenge. So thank you everyone for your attention. It was a pleasure talking to you.
All right, I think we are up on time. So just to summarize, I think it's been pretty interesting. I think the idea was to bring awareness around, what is happening in India. We hear a lot. And then, like I said, this is a very rare topic where you're trying to find the right balance between compliance and customer experience. And I think, but we've heard that, there is a balance. There is a sort of a paradigm shift in how the financial inclusion agenda is being taken forward, and at the same time keeping in mind, what are the requirements from a regulatory perspective. So thank you all for attending. I want to thank the participants for spending the time, and really best back to you.
Thank you so much for sharing all your insights. Thank you, Mr. Dhruv Chavla. Thank you, Mr. Sunil Kumar. Thank you, Mr. Michael Maiden. And thank you, Ms. Sucharita Mukherjee, for sharing your insights with us. I thank all those who are present here for taking your time and for being a part of this discussion. Again, requesting you to fill in the survey form. It's just to understand the state of KYC in India, and it's completely anonymous. And last but not the least, I thank Refinitiv for supporting this session. Going forward, if you would like to host a similar webinar or learn more about India Fintech Forum, do write to us at info@indiafintechs.com. Sorry about that. And thank you all. Stay safe and have a great week. We will start the networking now, so people can start joining in. And once again, thank you to all the speakers, and thank you to all the lovely attendees out there.
Thank you.
Thank you very much.